Struggling content providers Netflix and Spotify under pressure again today, but maybe they're better off together. A new op-ed on Medium poses the idea that Netflix should buy Spotify. It comes a day after speculation Netflix was maybe looking to acquire Roku. James Kakmak wrote the article. He's a partner and portfolio manager at Clockwise Capital. James, great to have you. You know, I was just thinking about Spotify's investor day earlier in the week and some of their long-term targets, which are totally FANG-like. I wonder, is this even in the realm of the possible?
I mean, it's possible if Daniel Ek thinks so, but the thing is that does have a dual class structure, so it's really entirely up to him. I mean, but the thing is Netflix needs help. I mean, for investors, they have to view it right now as a legacy media asset. And what made them so successful so fast was the fact that they were the only alternative to the cable bundle. Now that everybody's doing the same thing, that point of differentiation is out the window. And subscription fatigue is a real thing right now for a lot of consumers. And with switching costs so low, the only way to increase or to build a great subscription business is to increase the customer utility over time. Now, I think that with Spotify and Netflix, you solve two sets of problems for the price of one. Netflix has a growth and margin problem. Spotify has a churn and margin problem. So together, by reducing churn, you can increase customer lifetime value. Through marketing synergies, you reduce customer acquisition costs. And that increased LTV to CAC ratio is what drives shareholder value. I think you transform it from a discretionary asset to an increasingly indispensable one.
I was just thinking about the way in which the company got dragged into monetizing passwords. It took years for them to come around on that. Do you see them?
Sure.
Have they given you any indication they would be open to M&A of this size?
No, no, they haven't. But they have to do something. And if you read the New York Times interview with Ted Sarandos, I think a week ago, it was a fascinating interview. But the one takeaway that I had was that they are fully content with the status quo. And if you're going to keep doing the same strategy, mind you, that every single other media company is doing, you can't expect a different result. And they need to do something.
So in the end, if this were to happen one day, does Spotify become more video-oriented or does Netflix become more audio-oriented?
I think both. I think that there's a lot of content opportunities you can explore across the board. You know, you can have the video components with podcasts could be a big thing. And obviously think about the marketing efforts where you can promote your shows on audio and podcasts and things of that nature, the songs that are within the shows. So there's a lot of capabilities to keep people on the platform. The problem for all of these streamers is that the switching costs are very low. I can turn on and off my service when Stranger Things is on and when it's gone. So how do you increase those switching costs? You have to do something, and you have to make it differentiated in some way. And I think together it can form the most formidable global competitor to YouTube.
James, fascinating theory. I appreciate your time as always. Good to see you. Let's trade this
one.
I mean, whether it's Roku, Spotify, why are people talking about them needing to absorb something new?
Listen, that's a bold call, and I respect it. You get a lot of analysts that, you know, kind of want to stay within the mean or median and not, you know, veer to one way or the other. So I respect the call. My question would be, what about user-generated content? That seems to be a lurking competitive framework out there. How does this address that? I think when you think about YouTube, and he mentioned competing with YouTube on a global scale, that's kind of a linchpin of their business model. And it's not clear to me how this acquisition necessarily addresses that.
Yeah. Julie, your thoughts, I mean, compared to a theory or a game situation like this, I mean, for the time being, they're being much more tactical, aren't they?
Yeah, I agree. And I think user-generated content is exactly the problem. I don't think it's YouTube, though. I think it's TikTok. If you just look at downloads, that's really what's running away with everyone's attention. And, you know, if you're like a goldfish like me, it's pretty compelling, I have to say. I do think there's something to a Spotify Netflix deal. And it's true. You know, in the old days, Netflix was able to buy content way on the cheap because they were the only game in town. And they gave content creators total creative freedom. And now they're not. Now it's just really expensive to create content. And now there's just too much content. So I think being able to diversify into different kinds of content using the very, very strong algorithms that Spotify has, it's a better and more compelling business.
You know, Guy, one sort of parlor game on the street right now is trying to see which streamer would really rein in their budget first. Because It's very much a game theory situation. There's no guarantee that if you rein in your budget, your rival will or won't. And in that case, that's where you end up losing subs more than ever.
That's right.
Love parlor games. I'll say this, though. This is probably a $30 billion deal. Netflix doesn't have the balance sheet to do it, and they're not going to use their stock as currency at these levels to do it. And Spotify's shareholders will be like, what? This was a $350 stock in January of 2021. We're not going to go for this. So it sounds great. It ain't happening. All that said, Netflix is as compelling as it's been in valuation in quite some time.